What if I told you that becoming a millionaire through investing may not require $1 million to start? No, I'm not talking about a secret stock. I'm not talking about a magic crypto coin. And I'm definitely not promising you guaranteed returns. I'm talking about something much more boring. Investing consistently. Because here's the truth. Most beginners want to know one thing. What stock will make me rich? But that may be the wrong question. The better question is, how can I build a system that gives my money time to grow? In this video, I'm going to show you the exact investing mindset I would use if I were starting from zero. And by the end, you'll understand how a beginner could potentially build a $1 million portfolio over the long term. Let's start with the most important rule. I would not start by trying to get rich quickly. This is where most beginners make their first mistake. They see someone online making 100% returns in a few months. They see screenshots of massive profits. They hear stories about someone turning $1,000 into $1,000. And suddenly, normal investing looks boring. But here's the problem. Trying to get rich quickly can also make you lose money quickly. If I were starting today, I would focus on one thing: building a long-term investing machine. Now, let's imagine I have no investing experience. What would I do first? Step number 1, I would learn the basics. Before buying any investment, I would understand what I'm actually buying. What is a stock? What is an index fund? What is an ETF? What is compound growth? And what are the risks? Because if you don't understand your investment, you are not really investing. You may just be gambling with a chart. Step number 2, I would create an emergency fund. Before trying to build millions, I would make sure I have money set aside for unexpected expenses. Because imagine investing every dollar you have, and then your car breaks down, or you suddenly have a major bill. Now you're forced to sell your investments at the worst possible time. This is why financial stability matters. Investing is important, but investing money you may urgently need can create a serious problem. Now, let's talk about the investing strategy.
If I were a complete beginner, I would focus on broad, diversified investments. For example, many investors choose index funds or ETFs that give them exposure to a large group of companies. Instead of trying to guess which one company will become the next big winner, you can focus on owning a broad collection of businesses. The exact investment depends on your personal situation and risk tolerance. This is not personal financial advice, but the idea is simple: diversification, long-term thinking, and consistency. Now comes the part that most people don't want to hear. The first $10,000 may feel incredibly slow. Let's say you invest $100 every month. At the beginning, your progress may look boring. Month 1, a small amount. Month 6, still not life-changing. 1 year later, you have contributed $1,200. And you may look at your account and think, is this even working? But this is the exact moment where many people quit. They want the results before building the habit, and that is a huge mistake.
Later, maybe $500. And eventually, I may be able to invest even more. This is one of the biggest differences between saving $100 forever and building a serious long-term portfolio. Your investment amount can potentially grow with your income. Now let's talk about the $1 million goal. Let's imagine someone starts investing early. They invest consistently for decades. They take advantage of compound growth, and they continue increasing their contributions as their income grows. The goal is not to find one magical investment. The goal is to give your money time. Think about it like this. Your money can potentially earn returns. Then those returns may remain invested. Over time, the growth can potentially build on previous growth. This is the basic idea behind compounding. But let me be very clear. A $1 million portfolio is not guaranteed. Markets can fall, investments can lose value, and future returns are never guaranteed. Past performance does not guarantee future results. But the mathematics of long-term investing explains why time can be so powerful.
Now, here's the investing rule I would personally follow. I would never panic every time the market falls. And this is easier said than done. Imagine opening your investment account and seeing that your portfolio is down 20%. You feel nervous. You start thinking, maybe I should sell.
But then you remember your original plan. You were investing for the next 20 or 30 years, not the next 20 minutes. This is why your investment time horizon matters. If you invest for the long term, short-term market movements can feel completely different. But again, your personal situation matters. Your risk tolerance matters. And you should always understand the risks before investing. Now, let's talk about the biggest secret. And honestly, it's not really a secret. Consistency. I would rather invest a reasonable amount every month for 30 years than invest a huge amount for 3 months and quit. Because the best investment strategy in the world is useless if you cannot stick with it. You don't need to be a genius. You don't need to predict the next market crash. You don't need to watch financial news 24 hours a day. You need a plan, and you need discipline. Now, imagine 2 people. Person number 1 makes $100,000 a year, but they spend almost everything they earn. Person number 2 earns less money, but they consistently save and invest a portion of their income. Over time, who do you think has the better chance of building wealth? Income matters, but your financial habits matter too, because you cannot invest money you constantly spend. Now, if I were starting from zero today, my plan would be simple. First, I would learn the basics. Second, I would build an emergency fund. Third, I would choose a diversified long-term investment strategy that fits my personal situation. Fourth,